The last 24 hours has been absolutely monumental for Bitcoin. Firstly, breaking past the key resistance level of 118,000. This was the time that Jay Powell talked about interest rate cuts. So we now know that the market is ready for that after selling off twice when those interest rate cuts were first discussed. The second major event is that it is breaking past the 7-year resistance line once again. Now it's all starting to feel like we're nearly at that stage again, the time when most people come out of the woodworks expecting huge blow-off top moves. Now this is typically around a time that the majority of traders and investors come into the market relatively late. You can see that we're still trading around the old final stage that I have here on the total market cap. And I think we're about to move into the top buyers, those who come in late. Now, there are still significant gains, as we'll talk about in today's video, looking at forward returns and our cycle forecasts. But before we get too far ahead of ourselves, if you haven't already, hit the like button, share the content with a friend or family member, and of course, subscribe to the channel if you're new here. The latest reports have gone out. The last one is coming out today. Link to that is in the top of the video description. So first things first, we've been discussing the left and right translated cycles for Bitcoin for many, many years now. In particular, we had the left translated cycle that everyone was thinking about in March. And from my opinion, we were always running into a right translated cycle for this cycle. That is getting relatively close to a top, according to historic data. That comes in around October through to December. But with some of the day counts that we've seen historically for Bitcoin, that could run into the early part of Q1. The dates I'm referring to are the first cycle. You can see 1,148 days into the top of 2013. The other two cycles we've seen, in the top being 2017 and the next top 2021, they ran almost identically for 1,060 days with a 1-year decline. So we've got those two targets in mind. Somewhere around Q4 or the early part of Q1, should it replicate something similar to the first cycle where we had these three significant blow-off moves. You got one, and then the pullback, two, and the pullback, and then three into the top before everything came crashing down from that point. So we're definitely running on track here. This is obviously the grand final, the final boss stage of the market. We've also seen the weekly chart turn up. You can check it on the weekly here, and we can see the trends have now changed with yesterday's price action, taking out that top. And also, as we looked at, the 118,000 and the 7-year resistance level. So on a daily, we have one daily close above it. Weekly closes are ideal. So 4 days to go to get to that answer. Then the next stage is closing above 120,000. From this point now, any movement to the downside would probably prolong the consolidation. If it was to break 98,000, then you'd probably see the end of the cycle. But as it stands, with the trends now turning up on the weekly chart, this is a pretty significant move. As I said, 4 days to go to get to the closing price for the weekly chart, but nonetheless, it is still holding out relatively well. An even stronger close above 120, and then of course, we could potentially see a break of the high sometime in October. Now, if it was to go above 120, that would be the highest weekly close in history, and that in itself is a very bullish signal. On top of that, we've seen pretty solid liquidations, 600 million in the last 24 hours, most of those coming from the short side. We obviously know that that's most likely due to the shorts getting absolutely squeezed on this particular bar. And the benefit of this is that we're seeing the leverage players getting washed out, but at the same time, the market sentiment is still holding relatively stable. The interest in the market is also holding relatively stable as well, and we're not seeing any sort of major blow-off moves or anything major in the sense of market sentiment or inflows. We can see last time we saw very significant inflows on the Bitcoin ETF. These were around the times of the top, and then also around the times at another local high. So often when we get to those periods of the market where you've got a lot of investors piling into the ETFs, they generally mark a top. They could be a local top, they could be the final top, but in most cases they are a pretty significant top, like we saw in July when they piled in, and the same thing in August for Ethereum on the ETFs when they piled into Ethereum. That was right around the high of the market. So that's something to keep in mind. We haven't seen that yet, therefore it seems like this could be a move that can go higher. We haven't gotten overheated. And in terms of the FOMO finder, so looking at market sentiment, this came in around a low. It dropped into panic. You can see here in purple. The idea is we don't want to see this run into greed or FOMO, so the orange or the red too soon, as that could call another end to the move. Could be short-term end, but you can see it happens many times before. Running into greed often calls for local highs. You got right through the middle here in 2024, local tops, big pullback. Again, the ETF launch in 2024 for Bitcoin in January, local top and a pullback, and then one little peak here in December of 2024, and that the market barely went higher than that. So at the moment, we've seen some significant signs for lows, and the same deal here for the crypto fear and greed index. You can see we had higher lows forming, extreme fear on the tariff crash, again, extreme fear, and we just barely escaped an extreme fear reading a few days ago when it dropped into the lowest part of the fear. Now it's climbed back up into greed. So things are still looking relatively on track short term, and in the medium term when we look at the weekly chart as well. The liquidations wiping out a lot of that leverage. And if you follow the long short ratio so that things don't get too skewed either way, basically a positioning mechanism, the positioning is relatively equal here. Longs at 49.8, shorts at 50.2, differential of only 0.4. And as Michael talks about on his YouTube channel, Michael Pizzino, link to that is also in the video description, all part of the Investor Accelerator. When you get to a differential of roughly 3%, so you could look at this as 48.5 and quick maths 51.5, that would be a pretty big signal that you're going to see a flush out either end and coming towards a significant turning point, and that can happen long or short. So we're not at that either. Therefore, the signals are suggesting there is room to run further to the upside. Now, if we do see further to the upside, it's essentially falling in line with our analysis and our forecasts for quarter three that forecasted what may happen for quarter four, more often than not. Quarter three being the consolidation. You can see that on the price of Bitcoin. Here is July, August, September, and now we find ourselves in October. Essentially, that price range was the consolidation for quarter three, which generally leads to a push into quarter four. It doesn't mean that the entire quarter is going to be straight up. There's going to be some pullbacks along the way, but more or less, the probability suggests October being one of the best months in Bitcoin's history, and especially after a consolidation of quarter three. We've seen that this year now, that's confirmed. We saw it in 2024, nice push in quarter four. We saw it in 2021, consolidation again, nice push into quarter four. That came out into the all-time high of November. We saw it again, 2020, big push into the end of the year, which then ran over into the early part of 2021. And that is a possibility now running into the early part of 2026. I'm keeping that on my radar as well. The end of the cycle for 2017, July through to September, that period there, consolidation. So you had up, pullback, and then a big boom for the end of the year. 2015, that was the accumulation year there before the big bull market top in 2017, consolidation, and then a big boom for the quarter four. And the final one there for 2010, basically the genesis stage of Bitcoin. Now, as we've been following with our composite cycle, the 2020 and 2015 cycle for Bitcoin, October, first half, we may see this pullback and then a nice run into the second half of October, which then leads us into quarter four. As you can see, pullbacks are definitely coming, but it should be higher lows just according to the composite of the last 5 and the 10-year cycle. Not worried about the 4-year cycles here. This is just looking at a roadmap for this year of 2025 using the 5 and the 10-year, which is part of Gann analysis. He tells us to look at 5 and 10 year cycles, and we can see why. It continues to work out time and time again. Now we'll start to see some divergences here if this market was to fall back. But as we talked about in yesterday's video and leading up to this, leading up to October, what we have anticipated is a breakout of these little, the tops here on the blue. You can see this little peak there and this peak right there. That is looking at for a breakout. And as the data resets today, we get an update of the data that'll show that it is breaking out of those highs, because that is essentially these tops here, that point, and now you have the breakout there. So the best scenario now going forward is if this is to rally anywhere from this point, 120, 122, 124, whatever it may be, and the pullback happens above those highs, that is your icing on the cake. That is looking at a breakout of resistance and then a retest of resistance. That doesn't have to happen. It may pull back to a higher low, even further up, maybe above 120. We don't know yet. So the point I'm trying to make here is that don't wait for this particular low to come in to ensure that the next move is going to happen. Just know that if it does come anywhere back to those levels of around 117, 118, you've still got a good structure for the bull market. So as we've been following with the cycles, things are looking pretty damn healthy there. And in terms of the prices higher, as we keep going higher, breaking through these 7-year resistance, the price targets remain intact. We didn't see any breakdowns of the lows. Therefore, all of our fibs extensions that we've been tracking are basically on track for the mid 130,000 region. Let's turn on one so we can see mid 130s. And then the next target we're still watching is the mid 160s. I think we've still got more in the tank, especially when we take a look at the Elliott Wave cycle that Michael's been bringing us now for years on his channel, and of course with the Investor Accelerator. If you want to learn more about that, there are links in the video description. You can get the free reports for Bitcoin. It's coming out today, being Thursday. So the Elliott Wave cycle, which we've been tracking in real time, not in hindsight, but in real time, is suggesting that we have a run up here into wave 5, the short term, which is a wave 3, medium term, of the final wave 5. And that is basically the top of the cycle for total crypto market cap, and most likely Bitcoin as well, as of course Bitcoin makes up the majority of the market cap, being at 2.4 trillion. So I'll come back to those assets in a sec. But then there's a significant correction. So I'll repeat that. From this point, wherever we run up to right now, whether it's 4.5 trillion, 5 trillion, whatever it might be, there is likely a pullback to come, which would be wave 4. Seeing as the current movement right now, you can see this has basically mostly been consolidation between 3.3 and 3.8. What the rules generally state is after this run up, the pullback is probably going to be a little more severe than what we saw at this stage. So if we do get a significant pullback, try not to get scared out of the position. I'm saying that to myself as well. We've got to keep running. There is probably one more leg to go into the peak. And we've always maintained that trying to get into these tops is the hardest part of the cycle. These are the easiest parts, and I'm pointing to the lows. This is what we talked about on the channel at the time, 2022, 2023. They're the easiest times. The tops are the most difficult, at least from my experience and others that I've also spoken to that have been trading and investing for a long time. The reason being is that there is so much volatility at the tops, and you're basically in price discovery as well. That's the difficulty. At the lows, you can start to read the volume, you can read the sentiment, you can read the price action, and you can see when there is a change in trend happening, especially with overbalances in time and price. That is history. We will get to another one of those again, which is why I also suggest staying with the market. Continue to invest your portfolio and learn from the previous cycles that have gone by. Now, as we continue to run up into these peaks, we've been discussing a lot about metals, as they've also been putting on a major bull market, especially silver, running into new 14-year highs, and of course gold, all-time highs. Silver is less than 5% away from a new all-time high. And as this show continues on, you can definitely see the narrative for, well, at least from the media and other traders, investors, of course, media and people who are just thinking that the only way forward is that you have to buy Bitcoin, you have to buy silver, you have to buy gold, because the rest of the system is rubbish. I think it's all going to collapse. So I think that that sort of narrative is obviously going to play into the prices continuing to appreciate, along with the money printing going on, the devaluation of the dollar and the rest of our currencies around the globe. And of course, it's going to do good things for these asset classes. And you can see that happening in the top asset market cap. They've basically been running higher and higher and higher. I think by the time we get to Bitcoin towards this peak, it could probably cement itself in the top 5 for the peak, not for the long term, but at least for that peak. I think we potentially have about 50 to something-ish percent as we've looked at. I say something-ish. Let's have a look at where our targets are. From here is around 118 to the mid 130s is about 14%, and then running it up into the mid 160s takes you out to about 40 odd percent. Now, the article I was referencing here is that when we see a green September, which doesn't happen all that often for Bitcoin, generally for these at least 4 data points, October's been 33% up, 14% up, 28% up, 10% up. Then you got November, December, and then the Q4 total returns have ranged anywhere from 45% to 66%. So that basically comes in right at the lower end of our targets here if Bitcoin were to run up to the mid 160s, maybe touch around 170 to 180. A nice psychological level is there as well, around that 180s. So that, I think, falls pretty well in line with the data from an average point of view. I'm not trying to forecast $300,000, $500,000. I don't think it's going to go that crazy. I hope it does, but just got to be slightly realistic. At the end of the day, it is your money. And if that's the case, we get that sort of 40%, 50% on 2.4 trillion is going to add another 1.2 trillion. It's going to take Bitcoin to about 3.6, sitting at around 5th place if none of the other US stocks continue to rise. But of course, we have seen the AI stocks rising, and we've definitely got a nice solid uptrend for things like Nvidia and Microsoft being 2 of the biggest AI players. And that seems to be driving the bubble for the peak of the 18-year real estate cycle. Now, that is obviously going to help with investors in the cryptocurrency space, being that the risk on is going to come back into the space if it hasn't already marginally, as we'll look at with some of the altcoins in a sec. And of course, if we see more of that risk on come into the space, basically things are going crazy with AI, metals are going up, Bitcoin's going up, investors are going to look for other places to put their money because they missed out. And that typically happens in the top stages of the market. So as I've labeled here, top buyers, which is generally a distribution phase for those who got in relatively early. So you can have the early buyers at the low, even starting at the prior cycle bottom, before we get into the bottom of this current cycle breakout. So you're looking for confirmation buyers. They want to know for sure that we're going to break out into the start of a bull market and not head lower. And then of course you had the lucky retail who were listening probably in 2023 and thought they're going to leave it a bit longer. They had to get swept up into this move. And then of course the rest is history. We keep going up, and we've seen in the last couple of months early distribution from major whales as Bitcoin was hitting $100,000. They thought now was a pretty good time for them to exit some, maybe all of their positions, since they were holding from such low prices, taking out billions of the market. And they could only really do that now, considering the market caps. They could not take out billions earlier on because there just weren't that many billions in the space. As for the total crypto market cap, should it close here at $4 trillion, this would be the highest weekly closing price in the total crypto market cap's history, which of course is very, very bullish. And I suspect that bullishness is going to flow on for Bitcoin and ETH, obviously being the largest there. And obviously the rest of the market will follow suit. So this is very, very good signs for the next stages. The other fantastic signs here for Bitcoin cryptos and Ethereum, which are of course altcoins, is the USDT dominance. Now, the USDT and USDC there's been a lot more stablecoins being printed. Meanwhile, the dominance continues to fall. So what does that mean? That means there is more money out there, or at least more stable coins, money for crypto, and that money is going somewhere, and it's going into Bitcoin, Ethereum, Solana. It's sitting in those majors. We know there is billions and billions of stable coins being somehow printed, approximately 289 billion. It's up 42% year to date. So that's the total stablecoin market. If we were seeing the stablecoins drop, like the total market caps of the stablecoins drop, and this drop, you'd probably get a little bit more concerned, thinking, well, where is the rest of this money coming from? And you'd be even more concerned if you started to see the stablecoins drop with the total market cap and the dominance rise. So that means there would be so much less liquidity in the space, but it's not happening. It's happening the other way in both cases. Dominance dropping and more dollars coming our way, more Tether and USDC dollars coming our way. We can see that by the reports here from JP Morgan. Of course, we'll see how much we trust them, but we know from on-chain analytics that there are more dollars coming. Just how much and their forecasts, that's a different question. But we know that there is this much now, 42%, and nearly double the broader cryptocurrencies ecosystem at 21% gain. So according to a September 30th note, which is 48 hours ago, stablecoins now represent roughly 1.3% of the US M2 money supply. So these companies, in particular USDC, backs their USDC with USD, with bonds and so forth, treasury bills, and that's making up 1.3%. So this is something to be concerned with come the end of the cycle. What happens if something happens to USDC and they have loaded up their USDC, they basically bought all these treasury bills and bonds, and then they collapse? That could be something to think about. That's just a little bit of a side note. Let's continue on with the bullishness, the hopium, and how great things are potentially going to be. You've got stablecoins accounting for 7.5% now of the 3.8 trillion total market cap. We know that that total market cap has risen since that article. It's now at 4 trillion. And the beauty here is that we saw the USDT dominance rally, reject at the exact 50% level. Fantastic news. And then crash back into the trading zone, which is a bearish signal for USDT. Therefore, it's got to go somewhere. We anticipate that it is going into Bitcoin, Ethereum, altcoins, and that's what it has been doing. Now, the next stage for this dominance is to break the low here, 4.1%. This has been the trading range for many, many months now, going back to July, so basically 3 months. Ideally, breakdown of 4.1 takes us to 3.7. And if we break 3.7, then you can start getting your contracts ready to go get your Lamborghinis and I don't know, whatever else it is people do with their money. So that's all looking relatively healthy. We can see the stablecoins forecasts for 2028 could go to 2 trillion. This, I think, is just getting a little bit ahead of ourselves. We still have to get through the next 3 months to see where things head. Now, in terms of the altcoins, this is looking at the top 10, all the altcoins excluding the top 10. We've seen a slight bounce right off those lows there at 7.7%. This is for your altcoins. If you are trading altcoins, this chart needs to at least get back above 8.8 to 9%. Ideally, it crushes 10.5%. It has to break all of this zone here, 9.5 to 10.5. The 10.5 comes from an overbalance in time and price. That's to overbalance this rally. That just means if it can get as high as that, you're going to see a bigger altcoin season than what we saw in November and December, which was relatively tame. Until that can happen, this is all just rotation into most likely the major altcoins like your ETHs and Solanas, which are relatively well positioned for this next stage of the cycle, which I think most likely running into these final stages. We have the end of wave 3 to go, a pullback, and then a final peak. So Ethereum, good position here, sitting at the 50% level, closes above 4,400, going to be relatively strong, and you could consider that that low is the low, so that's at 3,800 now. If it rejects here, then we'll probably come back and test those levels again. The positioning that we've talked about when it comes to the commitment of traders still isn't favoring the long side, therefore I'm a little bit hesitant here, but nonetheless, if we were to see the commitment of traders start to drop off, you would get the commercials not being as long on the short side, so them not expecting this big downtrend, and they start to position themselves at a more neutral standing. That could be enough to start pushing the prices higher. Until all of those signs happen, a break above the 50, the commitment of the traders, then this is all just part of more consolidation that we've been discussing with this stage, with that October period, before we start to see some significant moves for ETH against BTC. You see the same deal here on ETH versus Bitcoin. It's been coming down since that high in August, so just over a month now. Solana is also well positioned. As we've been discussing, this looks like it is still going through a consolidation, especially after the rally of 23 weeks to the top at 250 bucks. It's done 23 weeks from a significant low to a high before, and before, and before, and before. Roughly around this mid 20 week period is what Solana has done for these big runs before it needs to pull back, consolidate, before it can get going again. So I think there's still more left in the tank for Solana, especially as it consolidates at a relatively strong level here above the 50% of 195, and ideally above this short-term one here around $222. That's going to be a really strong position, ready for the next move whenever that's ready to come. And we've been talking about that being in Q4 after Bitcoin rallies. ETH follows along. The Bitcoin dominance finally rejects at around 59-60%, and then we'll start to see more of that money flow out. Does it flow out into XRP? I think it will, once XRP can take out $3.40. This has been the sticking point since January of this year. So 9 months, XRP has been unable to hold above 340, which is, it's only marginally put in a new all-time high for this cycle, but there's still good news as it's holding up all of these lows. Now, I've talked about timing on XRP, spanning its entire history, looking at 12-month swings, 12 to 13-month swings from lows to highs, highs to lows. That is in effect. Therefore, if we see a rally into this resistance level, 340, it's resistance until it becomes support. If it becomes support, then that could be part of another lower high. And the US dollar is helping the gains overall. The dollar has continued to fall. We've discussed a short-term move to the upside, but nonetheless, this cycle seems like it still wants to go lower. This is the US dollar eventually taking out the low of 96. And for the rest of this 18-year cycle, it seems like it's almost inevitable that we're going to come down into the low 90s, if not test below 90 by the end of this cycle, getting into the corrective phase, the collapse phase of the 18-year cycle. But for now, it's basically been in a trading range for the last few months, and prices have continued to increase, which is all good for the asset markets. Just like gold here at 3,900 for the first time in history. This is our multi-year bull market that we've been discussing now for months on the channel. Silver, 14-year highs at nearly 48 US dollars an ounce, which puts it roughly 4% away from a new all-time high price. Yesterday's video, I'll leave a link to that at the end of this one. Go and watch that. It's the forecasting for October and Q4, in particular for metals in October. There is some weakness potentially there. I'll leave that video to the end. Still more signs for this market heading higher, with the S&P 500 climbing yet again, you guessed it, to another new all-time high yesterday and today in pre-hours trading. Now, this was our 5-year pattern here on the red line that goes back to the COVID days, and that's September through to November for a consolidation. However, what we've seen now is another break higher. So I'm still tracking this to see whether we do get some consolidation. But like we've seen in the past of this cycle, we've seen consolidation happen on the rise. So we're getting an upwards consolidation. This is basically like the big breakout move, and then the market just continues to consolidate, tests, and runs again. So we've had the breakout here. You see this move up, and now maybe we're going into another consolidation phase for a period of a month or so, which is still very, very strong for the market, but is slightly different to how the consolidation happened for the S&P 500 5 years ago. Nonetheless, it still looks like there is some pretty decent strength left on the table for this cycle, which of course is going to help out things like Bitcoin running into those new fresh prices that we've been tracking now. And for the end of the week, the data coming out, we're looking at unemployment claims and non-farm unemployment, yada, yada, from the Fed, and that will give them more ammunition for any sort of rate cuts that may be coming up. Of course, it seems like the S&P 500 is starting to price some of those in, and potentially Bitcoin is doing the same thing, especially, and this is so important, that it's broken through the 118. A few more days of consolidation above this level, that would give it a really strong position. Right now, it's just 1 day above those levels, the 118 and the 7-year resistance. So we've already taken out the interest rate news from the last meeting. That was August. Powell saying, looks like we need a cut. That was the big pump on him talking about that, and then the market sold off. And then that was the interest rate cut, and the market sold off. We've overcome that now, and it looks like we're heading towards the next bit of information for the Fed, and it seems like the market is trying to front run that now. Front run the other guys hitting the like button. Let me know your thoughts in the comments section down below. Do we have further to go into Q4, Q1 of 2026, or you think this thing is the super cycle that has been promised every single cycle before that? The free reports are out. I'll see you guys back here at the next video. Thanks again for your support. Have a great day. Peace out.